Good afternoon, everyone. I'm James Tetreault with your Southwest Ag Grain Market Update for October 19th, 2018. Well, it's been a good week for bean harvest here in Ontario for most of the province, with the exception of a few isolated areas that did receive some showers throughout the week. We believe soybean harvest in Ontario is roughly 60% finished, and if we miss the rain Saturday, we could potentially knock off another 10 to 20% over the weekend. For corn, we are seeing numbers range from 10% to as high as 30% harvest completion. The volume story continues to grow, as it seems the more corn we harvest, the higher the volume levels get. We are starting to get some rejections from end users, with rejection levels as high as 15 parts per million. We have seen local elevators indicate that they would be testing field by field basis, while other elevators have dropped their basis completely and are only sampling periodically through the day, with the intent that if levels do in fact increase, then they will move to a load by load or field by field basis. So this seems to be a province-wide issue now, whereas before we believed that there are only a few hot spots throughout the province. So most times in a panic, we do make rash decisions that aren't necessarily the right one, and sometimes we just need to let these markets take a few months to sort themselves out, and new opportunities tend to present themselves. Patience could pay dividends in this year. Volume levels won't go away, but sometimes it just takes the market, like I said, a few months to sort out exactly what they can do with the corn and create a plan on how they can use it. Moving into the markets, and yesterday was a gloomy day for beans as we seen traders selling off their longs, more so less of profit taking. Soybeans, however, rebounded from their lows on the overnights, only to trade lower mid-afternoon, while corn and wheat are both trading relatively flat. Bean futures were higher as investors are keeping an eye on truckers' strike in Argentina, and any slowing of movement in South America's country could push buyers back to the US. Also keeping futures underpinned are concerns about the quality of the US crop. While it's been dry for the past 7 days, widespread reports of crop damage after weeks of excess rainfall are being reported in the Corn Belt. Still, weak export sales last week and expected acceleration of harvest this week are keeping prices capped. Soybeans are on track for a weekly loss. Export sales of corn plunged to a marketing year low in the week ended on October 11th, while soybeans badly missed forecasts. Corn sales to overseas buyers last week were reported at 382,000 metric tons, down 62% from the previous week and 72% from the prior 4-week average, the U.S. Department of Agriculture said in a report. So that is lowest since the year started on September 1st. Analysts had pegged sales from 800,000 to 1.3 million metric tons, according to Allendale. Mexico was the biggest buyer at 162,000 tons, followed by Colombia at 133,000, Japan at 119, and South Korea, which took in 68,000 tons. The total was hurt after an unknown customer canceled shipments of 326,000 tons of corn, and the Dominican Republic nixed a shipment of 18,000 tons. Soybean sales came in at 293,000 metric tons, and that's down 33% from a week earlier and 67% from the average. Analysts had expected sales from 600,000 to about 1 million tons. Keeping an eye on the US and Canadian dollar, the Canadian dollar weakened to a 5-week low against its US counterpart as the greenback broadly climbed and oil prices added to a sharp decline the previous day. The Canadian dollar traded lower to about 76.28 cents US, compared with an average of 76.59 cents US. The currency also touched its weakest level since September 11th. The decline for the loonie was driven mostly by the strengthening of the US dollar rather than anything Canadian specific, even though Canada did legalize pot on October 17th. So if you're looking for any positives in the market today, look at 2019 corn, as values delivered to the end users are reaching some very profitable levels, especially in the June-July months. So that's all I have for you folks today. Please continue to stay safe this harvest, and I look forward to talking to you guys next week. I'm James Tetreault, keeping the swag in ag.